Alright, agents. So in this video, we are going to talk about what you call top-down analysis, you see. So I wish I knew this thing earlier before I started my forex journey. So basically, gents, there are some trade, actually market alignments or chart alignments. You see, that's the first thing that you have to know before starting to trade, you see. So first one, as you can see over here, I've what this one over here is when like you want to be what you call a full day trader. If you want to be a day trader, fully so, which means you're going to trade each and every day here on this first one, which means you're going to do what on a 1 hour time frame. That's what we're going to look for your trend, then 15 minutes point of interest, then 5 minutes for your what for your entries. Same applies to this one over here. This one is also a day trader, but then you might not find your trades every day. So you see, so first thing first, you're going to do it, your trend on your 4 hour, 1 hour for point of interest, 15 minutes for execution. Even over here, daily time frame trend, 4 hour, point of interest, 1 hour execution. Also on this one offer. Also, you see this one, the last one. This one is whereby when you want to be what a position trader, whereby like you hold trades for the like longest time, maybe 3 months or so, whereby you're going to analyze, going to check your trend where on a weekly time frame, daily time frame for your point of interest, then 4 hour for your entries. You see, so this is what we must do actually, or this is what we must first think of. Like if you want to be like a trader, you must know these things, the trade alignments or what you call chart alignments. You see, so without wasting any time, gents, let me just get into the detail of what top-down analysis. So what is top-down analysis? So basically, it is a evaluation. It's actually what you call evaluating actually the overall strength and direction of the market trend. So you need to know whether the market is going up or down, so that you can take what you call your trades in that direction. If the market is on a bullish phase, which means you're going to look for what for buying opportunities. Then when the market is bearish, you're going to look for what you call bearish things actually. Well, let me just remove the drawings so that I can show you what I'm talking about. Okay, so I'm going to like separate the parts actually like in three. Yeah, well. So part number one, this one is my what? This one is my high time frame. Remember what I said about high time frames? 1 hour time frame matches with 15 minutes and 5 minutes time frame. You see? So okay. Sorry about this. Okay. Let me just do this like real quick. So guys, let's just say here it's our higher time frame. Let me just say 4 hour time frame. You see, 4 hour time frame. Then here it's what your 1 hour time frame. Then here is what 15 minutes time frame for what for your entries. You see. So remember what I said. I said here you're going to look for what for trend. You're going to look for trend whether the market is going up or down. Trend. You see, whether the market is doing what is going up like this. So guys, if you don't know what is an uptrend or downtrend, I have so many videos on my page explaining what is like market structure actually. You see, so this one over here, we can say what this is what it's an uptrend. You see, uptrend. Then what? Then downtrend. Then only 1 hour time frame. That's where you're going to look for it for your point of interest. You see, let me just say point of interest. Point of interest actually can be what you call your order blocks. You see, order blocks, fair value gaps, or maybe what you call your golden zone on your Fibonacci retracement, which is what 61%. This one is a golden zone when you're using Fibonacci retracement. Or it can also be what you call your breaker blocks. This is what we call what point of interest. Ne? Then on the 15 minutes time frame, that's where we're going to look for a change of market structure plus the confirmation aim so that you can enter your market. Let's just say like on our 4 hour time frame, the market is going up like this. Ne? Then the market on 15 minutes, it breaks this low actually, then gives us what? A change of character so that we can sell or buy the market, depending on your thing, or depending on the structure of the market of the pair that you are analyzing. So right now we are on what you call, we are on gold. Um, so guys, I'm going to start on my 4 hour time frame. You see, so let me just click my 4 hour time frame over here. So remember what I said. I said on your 4 hour time frame, that's what we're going to look for, what? For a trend of the market, whether the market is going up or down. So first thing first, immediately when you open your chart, just click the right side of your mouse, then do what? Say restart chart. After restarting chart, this is what you are going to analyze from. Do not go any further backwards like this. Nah, again. Just restart your what? Your chart. Then this is the structure that you are going to work on. You see. So you're going to start from this side over here. So as you can see over here, we have what? A break of structure to the upside. You see. Then what? Here, market structure shift. So everything that is happening here, guys, is what you call internal structure. So you're not going to mark these things as your what, as your break of structure, market structure, or whatsoever. This is what we call internal liquidity. We have what? External liquidity and internal liquidity. Your external liquidity are your higher highs and higher lows of what? Higher time frame. You see, higher high and what? And higher lows of what? Of your higher time frame. This is what you call what? External liquidity. Let me just mark it up for you so that you can see. So everything that is happening between the two range, between this and this, everything that is inside here is what you call internal liquidity. So if you want to trade internal liquidities, that's where you're going to go to your lower time frame so that you can trade what? Your internal liquidities. You see? So immediately we have this market structure shift over here. The high that created this market structure shift is this high over here. You see? So we can conclude by saying that the market right now is on a pullback phase from what? From going down. So let's just mark our range like this. You see? Let's hope we can see that, James. Okay. So since we marked our range like this, meaning that here we have what? Our buy side liquidity. Then here we have what? Our sell side liquidity. If the market breaks and closes above this high, we can simply call this what? A market structure shift. Then if the market can close below this low, we can say what is a break of structure way to the downside. So guys, when you're done marking your range like this, you take your Fibonacci retracement, you mark what? Your buy side liquidity and your what? And your sell side liquidity, just like this. You see, after marking this thing, anything above 50%, that's where you're going to do it to look for your selling opportunities. Then anything below 50%, that's where you're going to do it, look for your buying opportunities. We use premium and discount. Obviously, guys, your discount zone is where below 50%. You are always going to want to buy something on a discount. You see, you buy something when it's on a discount. Then when it's on a premium, that's where you want to do it to sell the price. So this is the first thing that you have to check before going into the market. So everything here is what? Your internal liquidity. You see, so here you're not going to mark anything. That's where you're going to go to your 1 hour time frame and look for what? For some things or for some interest. Remember also, guys, we do what? You restart your chart. Do not analyze further than that. Just simply go here, press your right mouse click, then restart chart. This is the structure that you're going to look at, and this is the structure that you're going to trade for now. You see, so from here, you're going to look for your point of interest. It can be your order blocks, fair value gaps, and whatever, guys. You see, so here, that's where you're going to do what? To analyze the structure. Remember, guys, when it's like this, you're going to do what? You're going to look for what? For your buying opportunities, as you saw where on our 4 hour time. I mean, for your selling opportunities. Because why? On our 4 hour time frame, the market is what? It's on our premium zone, and we always want to do what? sell on premium and buy on discount. You see, so we are going to go to a 1 hour time frame and mark the structure of our what of our 1 hour time frame and look for what you call selling opportunities on where on our 1 hour time frame. You see, so we are here on our 1 hour time frame. First thing first, just restart your charts, then do what mark your structure from what from there. There's a visible point because there you cannot see what was the market doing. Just do it here. You see break of structure to the way to the upside. That's here. Then what you call market structure shift over here. You see. So here's the structure, guys. So when you're done, you're going to also with what this smaller nyana break of structure over here. Then a market structure shift over here. And a break of structure to the upside. And another break of structure to the upside over here. You see. So this one, guys, of here, we don't call this one what you call a break of structure. We call this what a liquidity sweep, not a break of structure. You see, because why? The market did not close with a body above it. It closed with what? It closed with a wick. This is what we call what? A break of, I mean, a liquidity sweep. So, guys, if you want to learn more about liquidity sweeps, you can just simply go to my page and watch some videos about liquidity. You see, so yeah. So when it's like this is our last break of structure to the upside. So when you're done, you're going to do what? To take your Fibonacci treatment, mark the low and the high. You see, mark the low and the high like this. Remember what I said, guys. I said anything below 50%, which is our blue line, we are going to do what? We are going to buy. Then anything that we see above our 50%, that's what we're going to look for selling opportunities. So in this case here, you see the market bought um after taking out actually this 50% of our Fibonacci retracement, it went back up. So right now it's where it's on our premium zone. We are no longer going to mark this one over here. We are going to extend our line or our Fibonacci retracement to what to that high over there. You see, as simple as this. So when you're done, you're going to do what? Go to your 15 minutes time frame to look for what for your entries. Your entries, guys, it can be what you call like anything that you use for your entry. But then this is an example of what you call of our market structure or what you call top-down analysis. You analyze your charts from your 4 hour time frame or daily time frame or anything as your higher time frame. Then you drop down to take your trades way on a lower time frame. So I have a free group on WhatsApp. Just simply click the link on my bio so that it can take you straight to my WhatsApp group. So to analyze another pair, let's just check what you call GBP JPY. So remember, guys, first thing first, you go to a higher time frame. It can be any time frame of your choice. But then I'm simply choosing one for our time frame. It's my high time frame. But then, okay, let me just change another time frame. Let me just use daily time frame as my high time frame. First thing first, click here, restart chart. So I'm going to analyze from our our last break of structure or market structure shift to the downside. So in this case, you can see over here we had what? We had a break of structure to the upside. Ne? Then what do we have here? We have what? A market structure shift over here. Then another break of structure over here. See? Then what else? Another break of structure here. So here the market was going down. We can call this what? A downtrend. You see? So until what happened? The market did what? Broke this high. Remember, guys, we are also making what? Our external liquidity. This is our low. Ne? This is our high. Then this is our low. This is our what? This is our high over here. then our low again, our high, and this is was our last low before the market breaking this high over here. So you are going to take what your Fibonacci retracement and mark your what your low to your what to your high like this. So guys, when it's like this, you're going to look for buying opportunities above, selling opportunities above 50% and buying opportunities below 50% of your Fibonacci retracement. Remember, guys, we are always going to buy something when it's on what? On a discount zone and sell something when it's on a premium zone. This is what you call premium and discount. So once you are done doing this thing like this, you do what? Now you understand that you're going to look for what for your selling opportunities right here and your buying opportunities right here. Let me just take my Fibonacci retracement and draw it like this. You see? But then guys, remember the market is what it's on an uptrend right now because it's shifted structure over here. You're going to scalp sells and do what and hold buys. So you go to your forward time frame to look forward for your point of interest. You see? So guys, it can be your order block, breaker block, or anything. You can use anything as your point of interest. If you want to learn more about those things, I have a free group on WhatsApp. Just click the link on my bio, join my WhatsApp, and everything will be sorted there. You see? So first thing first, guys, you mark a what on your forward time frame. As you can see, I'm on my forward time frame right here. What is this break of structure to the upside? You see? Then what do we have here? Market structure shift, meaning that the market was bearish over here. Then this one is what? This is our last break of structure before what? Before market doing what? Breaking this high that created what? Our market structure, our break of structure here. So meaning here the market what did what shifted structure. So you're going to take your Fibonacci retracement and mark what? And mark your low to your high before the market retracing back into your zone like this. So as you can see, the market swept out our 50%. So when the market sweeps our 50% like this, you're going to do it to look for your buying opportunities or your point of interest. Your point of interest can be what fair value gap point, fair value gap, breaker block, order block, anything that you use as your, point of interest. But then if you want to learn about my point of interest, just click the link on my bio and join my free group. So as you can see, the market swept the 50% here. Then what did it do? It went back up. You see, this is simple. Then where your entries are going to take away your entries on why on a 1 hour time frame. Here's another example of an entry. Check. Liquidity sweep. After sweeping liquidity, what did it do over here? It broke here. Where we can call this one market structure shift or a change of character. Then what did it do? It retraced to our point of interest. This order block over here or this fair value gap over here. Remember, God, what I said, you can use anything as a point of interest. Then you're going to do what? You are going to do what? You are going to buy from here. Stop loss below this low, then you take profit, bam, up there. So let me just calculate how many days it took for this trade to play out. So basically, guys, you were going to hold this trade for almost 2 days, because 1 day, 21 hours actually, almost 2 days on one trade. You see, so this is how simple it is to trade what you call market structure or what top-down analysis. You see, so guys, you must avoid using lower time frames because they are risky to trade. You don't want to be a scalper. So basically, when after entering this market, you can simply set what your stop loss and your take profit, then go and enjoy life, man, and avoid spending much time on your charts. You cannot be spending 24 hours on a chart, guys. Trading for 24 hours, nah, that's not healthy. So you must take a minimum of 2 trades a day. Actually, 1 to 3 trades a day, or 1 to 2 trades a day if you want to be what you call a profitable trader. So without wasting any more of your time, guys, let me just cut this video right here. You see, so we are going to continue this session another time, guys. So please like, comment, and also share this video with your friends. That guys, let's get to 3K subscribers by the end of the month. Peace out, that gents. Danko.